Good afternoon, everybody. Aquatic here with the Real Report. First off, I want to say thank you guys so much for getting the channel over 10,000 views, and we're currently sitting at 188 subscribers, so thank you guys very much. If you're new here, go ahead and hit that button with the notification bell. Please leave a like to help me out, and if you guys have any interesting comments, thoughts, or concerns, leave them down below because I do read every single one. And a special shout out to Straw Walker for having a lot of interesting insight, and I still need to catch up on the Zaporizhzhia post that looked extremely interesting. So thank you guys for all the support. Hopping into this, we're talking about the rail strike threatening to slow the U.S. supply chain recovery. Everybody is familiar, or probably has heard the rumor mill. Something big is happening on September 16th. Well, here it is. Nationwide rail strike from some of the biggest shippers in the country, rail-wise. Also, we're going to be covering the U.S. nurses strike and a little bit on today's market. Everybody probably saw inflation readings, Stokes expectations the Fed will remain aggressive in hiking interest rates. We're going to be covering that at the end of the video as well. So hopping into this week's shaping up to be a pivotal one for companies in the U.S. that rely on trains for transporting commodities, components, and finished products. Railroads and labor unions worked through the weekend to avoid strikes that could cost the world's largest economy more than $2 billion a day, and it looks like it's going through. Norfolk Southern sent an online notice it has begun enacting its contingency plans for controlled shutdown of our network Friday, September 16th. Union Pacific, CSX, also announced contingency planning for a possible strike. BNSF urged its customers to call members of Congress to prevent any interruptions. According to Bloomberg Intelligence analyst Lee Klaskow, BNSF and Union Pacific, hear this, combine 45% of Class 1 intermodal traffic. CSX and Norfolk Southern have 31%. That is a lot of freight movement. Trains accounted for about 28% of the total U.S. freight movements in the country. Particularly, half that traffic moves bulk commodities, food, energy, chemicals, metal, wood products, as well as automobiles and industrial parts. Guys, the supply chain is already under a tremendous amount of strain, and this is only going to make it exponentially worse. The other 50% consists mostly of shipping containers carrying smaller consumer goods as well. Skipping ahead, nearly 80% of shipping containers are waiting more than 5 days on average already to make their rail connections, a big jump from the beginning of the year. 25% of all U.S. freight rail traffic and 46% of all intermodal traffic starts, stops, or passes through Chicago region. Fun fact. Also big ones, you've got Texas, Illinois, Ohio, Pennsylvania, California, Kansas, Georgia, Minnesota, Indiana, Iowa, respectively. Down here, out of an absurd comment, the statement from the, well, skipping it, going back a little bit, 10 of the 12 railroad workers unions have struck new labor deals. The two holdouts, the Brotherhood of Locomotive Engineers and Trainmen and the International Association of Sheet Metal, Air, Rail, and Transportation Workers, account for more than 90,000 employees. Their joint statement on Sunday didn't hold back, accusing the railroads of scare tactics in negotiating process that amounted to, get this, where have we heard this phrase before? Corporate terrorism. Yes, when you don't like something, find a word, terrorism, put another word before it. The timing isn't good for trains to stop running. No duh. Harvest season across the Farm Belt is approaching, retailers are stocking up for the year-end holidays, and the economy already faces a stretch of weaker growth and high inflation. Again, we're going to be talking about today's inflation at the end of the video. Getting down here to part 2 of the article, railroads unions work to avoid strike and supply woes. That was an article from a few days ago. 6 Class 1 freight railroads will begin to take steps to manage and secure shipments of hazardous or sensitive materials starting Monday, yesterday. The railroads want and continue to advocate for a prompt resolution that would provide historic wage increases to rail employees and allow the railroads to continue servicing customers and prevent further disruption to the struggling supply chain. Negotiations, which began back in January of 2020, shortly after the labor contract froze at 2019 levels. They're saying 10 of the 12 railroad workers unions have struck new labor deals already, but there's 2 holdouts. Again, Brotherhood of Locomotive Engineers and the Trainmen and the International Association of Sheet Metal, Air, Rail, and Transportation Workers. Again, 90,000 employees. Any stoppages would drastically make inflation worse for Americans, said the Agricultural Transportation Working Group, a collection of 31 agricultural organizations, in a letter to lawmakers. They're urging Congress to prepare to intervene, which they have the power to stop this if necessary to prevent a strike from taking place. Now, what's the common theme here? Well, perishable goods. I've done countless videos on this already, and the points just keep stacking up. And unfortunately, I prefer not to be right, but stacking up in my favor. A stopping would occur as America's farmers harvest their crops and would exacerbate global food insecurity. Where have we heard that term before? Likely contributing to further geopolitical instability in regions that experience, you guessed it, famine, the letter added. Transportation Coalition said any sort of labor disruption would hurt mostly those transporting perishable goods, food. If the supply chain slows and the ship is going to be delayed getting to the foreign country, the exporter is forced to direct the temperature to drop from chilled to frozen. The sale price of the contents drop from maybe $175,000 down to $50,000. They're saying what perished? About $125,000. All the profits gone if that happens. The American Bakers Association, another group affected, a Washington-based trade group representing more than 300 companies, said it was very concerned about a rail stoppage and its effects on an already fragile supply chain. Remember, it's not just the 90,000 workers, it's not just 6 freight companies. There's all the second, third, fourth tier consequences and repercussions of things not getting delivered on time all across thousands of miles of territory. Even a temporary interruption would create a devastating ripple effect that would create a shortage of materials and ingredients for baked goods on top of everything else. So keep an eye out for that. No, I don't want to subscribe. Keep an eye out for that. I'm going to cover it further if we hear any interesting developments, but it looks like it is a go. So, not going to say hit the panic button, but if you guys need to order something, well, potentially might as well do it today. And on top of that, there's also some more issues in China. I believe tsunami warnings closing ports, which are going to delay shipping from foreign countries to the U.S. on top of our own domestic freight problems. And to make matters even worse, huge U.S. nurses strike began with 15,000 nurses across Minnesota and Wisconsin pausing work. That's right, thousands of nurses in Minnesota launched a 3-day strike yesterday, complaining of low salaries and understaffing. Worsened by the strains of the C-19, some 15,000 nurses at 7 healthcare systems in the Minneapolis and Duluth area walked out. Obviously not good if you're seeking health care or need to have elective surgeries done, etc. The largest private sector nurses strike in U.S. history kicked off Monday. Organizers said with some 15,000 workers. The 3-day nurses stoppage was set to last until Thursday morning, and maybe making some adjustments to non-emergency care services to ensure adequate and safe staffing during the strike period from North Memorial Hospital in Robbinsdale, Minnesota. The two sides have been negotiating for more than 5 months without reaching an agreement, and a group representing the hospital says it has proposed a wage increase of, you guys thought inflation was bad. They're proposing wage increases of 10 to 12% over 3 years, essentially worthless. Inflation used to be 4% a year, and now it's, 30, 40, 50%. If you're living in Europe, your energy bill's up 400%. Anyway, the nurses are seeking raises in the range of 27 to 30%, and I have to agree with them. That is not unreasonable at all. And finish this video up, we're going to be looking at the market real quick. Information technology, communication services, consumer discretionary, consumer staples, financials, energy, utilities, materials, real estate, industrials, healthcare, all absolutely butchered today. It is a sea of red. Here you can take a look at the S&P 500, the ES contract. Took a big tumble. We were looking at this a few days ago. We're now down 3.5% on the day, just about, or 138 points. Now, the reason for that, again, U.S. stocks slumped Tuesday after 4 previous days of gains as an unexpected monthly rise in the August Consumer Price Index dashed hopes for further slowdown in inflation and reinforced expectations the Federal Reserve policymakers will continue to aggressively tighten monetary policy. Essentially, the popular index tracking exchange-traded funds, S&P 500, SPY, Dow Jones Industrial, NASDAQ, QQQ. QQQ was down 4%. S&P 500 was up 5.2% over the last 4 trading days. But the real question, what's driving markets? Well, the August Consumer Price Index, or the CPI, rose 0.1% in August. Through the year-over-year rate slowed to 8.3% from 8.5% in July. Economists had looked for a monthly fall of 0.1. That would bring the year-over-year rate down to 8. So still lower than 8.5, but higher than the hoping for 8. U.S. inflation roared back in August. CPI shows despite falling gas prices, which are just one part of the whole picture. The notion that inflation may be stickier than economists had expected was enough to send U.S. stocks into a tailspin as volatility surged, with the CBOE Volatility Index, otherwise known as the VIX, rising more than 7% to 25.6 in the afternoon trading hour. Markets were jolted by a nasty CPI print this morning and are responding in kind, said Cliff Hodge, Chief Investment Officer for Cornerstone Wealth. Misses on both the headline and core are disappointing as this bout of inflation proves to be anything but transitory, which, if you guys have been following me for a while, or even back on the old ARM YouTube channel, we knew inflation wasn't going to be transitory, and at worst, we were going to get stagflation, which looks to be occurring. Price gains were pervasive, with more than 70% of the CPI basket rising by at least 4%. Unfortunately for markets, this print will reinforce the need for the Fed to remain aggressive, aka more rate hikes. And that's just going to make things spiral out of control even worse and crunch the economy further. So, stubborn inflation pressures will likely force the Fed to, quote, turn up the heat on its tightening campaign, which puts the broader economy at further risk of a material downturn, aka a recession, and then a depression. To you who are, instead of saying climate deniers, we should start saying recession or depression deniers as far as the economy goes. So, in recognition of these uncertainties, investors should maintain an underweight risk posture, particularly given the premium valuation still prevalent in equity markets. Zooming out here on the chart, you'll see another perspective as well. We have barely had any kind of correction at all whatsoever. 4808 high, S&P 500 low is only 3639 back in 613. Again, rocketed up here. We talked about this percent gain over the previous months, so naturally correction, and obviously we had a bounce. You can see these price levels, everything's respecting pretty well. 3900 is a level we've been watching for 2 years. 4,000 same, 4,200 same there, and all the other price lines. Here you can get a little bit better sense on just using a line chart for perspective. And of course, we've got the 10-year and the SPY inverted. All right, guys, that's going to do it for today's video. If you found anything interesting, please leave a like, comment down below, and hit the subscribe button. Share with family, friends, etc. See you guys in the next one.